Buying a $1.5 million home in Toronto costs you $57,000 in hidden taxes before you even get the keys. Not property tax, not income tax, land transfer tax. Here's every hidden housing tax Canadian homebuyers are actually paying. When you buy a home in most provinces, you pay a land transfer tax at closing. It's calculated as a percentage of the purchase price, and it scales up the more expensive the property gets. In Ontario, the rates start at 0.5% on the first $55,000 and climb through several brackets up to 2.5% above $400,000. On a $700,000 home, that works out to roughly $11,000 in provincial land transfer tax alone. But if you're buying in Toronto, it gets significantly worse. Toronto is the only city in Canada that charges its own municipal land transfer tax on top of the provincial one. The industry calls it the double whammy. On that same $700,000 home, you would pay an additional $8,000 or so to the city. Combined, that's nearly $20,000 gone at closing just in land transfer taxes. For a first-time buyer who spent years saving, that $20,000 was supposed to be their emergency fund or furniture budget. Instead, it disappears into government revenue before the first mortgage payment is even due. And in 2026, Toronto raised the rates again. City Council approved steeper graduated rates on the municipal land transfer tax for properties over $3 million. Starting April 2026. The city expects to collect an extra $13.8 million a year from this change alone. Whether you agree with the policy or not, the pattern is clear. Land transfer taxes keep going up. They never come down. Now compare that to Alberta. Alberta does not charge a land transfer tax at all. You pay a small property registration fee of $50 plus $2 for every $5,000 of purchase price. On a $500,000 home, that's roughly $250 total. Not $20,000, $250. That difference alone could cover 6 months of mortgage payments in many Alberta markets. This is one of the reasons 37,000 British Columbians moved to Alberta in a single year. Saskatchewan charges a land transfer tax, but the rates are modest. New Brunswick charges 1% flat. Nova Scotia has municipal deed transfer taxes that vary by municipality but are generally low. Newfoundland charges a flat $100 plus 40 cents per hundred above $500. Quebec has what they call a welcome tax that ranges from 0.5% to 3%, depending on the municipality and property value. Montreal charges higher rates on properties above $500,000 and above $1 million with no first-time buyer exemption. The tax burden varies wildly across provinces. A buyer in Toronto pays tens of thousands at closing. A buyer in Edmonton pays hundreds. Same country, completely different cost of entry into home ownership. But land transfer tax is just one layer. When a developer builds a new home in Toronto, the city charges development fees. These are meant to fund infrastructure like roads, sewers, transit, and parks. In theory, that makes sense. In practice, the charges have ballooned to staggering levels. Development charges on a single detached home in Toronto now exceed $100,000. On a large condo unit, they exceed $50,000. These fees get baked directly into the purchase price. You never see them as a separate line item. You just see a home that costs $100,000 more than it should based on actual construction costs. Then there's the community benefits charge, which replaced the old density bonusing framework. It applies to high-density developments of 5 stories or more. The rate is capped at 4% of the land value. On a $50 million development site, the developer pays $2 million to the city before selling a single unit. That cost gets distributed across every unit in the building and passed to buyers. The underused housing tax adds another federal layer, a 1% annual tax on vacant or underused residential property. It applies to non-resident owners and certain Canadian corporations. Even if you're exempt, you still have to file a return every year. Miss the deadline and you face penalties starting at $5,000 for individuals and $10,000 for corporations. The non-resident speculation tax is yet another layer. 25% in Ontario, 20% in parts of British Columbia, 5% in Nova Scotia. These taxes reduced some speculative activity, but they also reduced investment in new rental supply, which has contributed to the rental affordability crisis. Now add annual property taxes. Toronto's residential rate is one of the lowest in Ontario on a percentage basis. But because home values are so high, the actual dollar amounts are significant. A home assessed at $1 million pays roughly $6,000 to $7,000 a year. And municipalities across the country keep raising rates annually to close budget gaps. Here's what most people miss. These taxes don't just affect the people who pay them. They shape the entire market in ways that make affordability worse for everyone. Development charges make new homes more expensive, which pushes up existing home prices. Land transfer taxes discourage people from moving, which keeps inventory tight and prices elevated. The non-resident speculation tax pushed foreign capital elsewhere, reducing investment in rental projects cities desperately need. Every layer was introduced to solve a legitimate problem, but collectively they've created a system where the total cost of entering the market keeps climbing, even when home prices are falling. A buyer in Ontario looking at a $500,000 home needs the down payment plus $8,000 to $10,000 in land transfer tax, plus legal fees, plus title insurance, plus adjustments. In Toronto, double the land transfer component. On new builds, the development charges add $50,000 to $100,000 to the price. The provinces with the fewest housing taxes are attracting the most people. Alberta has no land transfer tax, no provincial sales tax, and lower development charges. Atlantic Canada is affordable partly because entry costs are so much lower. People talk about housing affordability as a price problem. It's also a tax problem. Did you know about these hidden costs before buying? Drop your experience in the comments.